traders, and welcome to the Technical Analysis Market Wrap on Friday the 26th of March. So we've seen some really good movements this week. Some of the key zones on the majors have been broken, and we've seen some really good retracements to some really key support and resistance zones. So we'll jump straight into the charts and see if we can identify the next potential moves for early next week or into today's session. So we'll jump straight into the Aussie USD here. This is the daily chart, as we always start on. You can see that we had that big breakdown from that 77-cent level. Okay, we finally got the break that we needed. Certainly pushed the moving averages down. The 20 looks like it's about to cross the 50. It's not going to take a lot of power now to actually make that happen. This has not happened since way back here when it was down at 72 cents. So a very important cross, and of course a very important zone has been broken. So we can see that's about to cross now. What we can also see is the current price is around this level here, as you can see. Now, what this is also a very key support zone. Okay, we saw very strong support here way back in February of this year, and of course it was resistance around this level here, which was late last year. So this is still an important zone around that sort of nearly 76 cent level, but if this fails to hold, it's got a pretty long way to fall before it finds its next support level. That's around that 74 cents. So what more than likely will happen here is this support will provide a bit of a resurgence to go up. In a perfect world, the moving average will catch up down and we'll see a bit of a retrace, maybe to around this level here, around that sort of mid 76 cents. If it gets to that level there, I'd be pretty keen on looking for the shorts. That's also a key level. You can see that we had resistance there and support there. If we get a pullback to that zone, I'd be looking for shorts on the smaller time frame, but definitely a good trading opportunity either way now. But it is at support, so just be mindful if you are shorting it. It looks like it's got a bit to fall. The MACD is showing that as well, and the moving average cross, but I think it will probably retrace before it does that, so just be mindful of that if you're going to trade it. All right, we'll move on to the US dollar CAD. This one has been a great trade for the last 2 weeks now, really. We've seen a big resurgence here once we saw that big positive candle. MACD signal line is out of the histogram, which is awesome. But what it does do is it finds itself at that role reversal zone that we've been talking about. It was strong support for a very long time. Now it's right at that zone from underneath. So we would fully expect that it's going to have a fair bit of resistance here. One to watch, you've got to go to the smaller time frames to probably look for the change of trend. For mine, because it's such an important level, I'd be looking for probably a 4-hour change of trend or a 1-hour change of trend, lightning bolt effect at this level. If we get that, we can definitely look at shorting it again. I think it's one of those ones where it probably won't go past this zone without a bit of a pullback. I think it could definitely reverse from here as well. It has been weak, but in saying that, I wouldn't be going long until it effectively gets a daily close above these moving averages here. So you'd want to see a daily close above the 126.50 at the very least. If it does that, it's more than likely going to keep going longer. But the obvious trade here is probably a short from this level. See it pull back a little bit. Look for a lightning bolt effect on a smaller time frame, and use the role reversal for what it is, which is a very good shorting zone. But just be mindful, it has had a lot of strength, and I don't like shorting things that have had so much strength in the last few days. So you've got to be really careful and wait for the lightning bolt on a 1-hour time frame at least. And it is only a scalp on the way down. Don't forget that. It's not a long-term trade. Just look for the scalps. All right, we'll go to the all-important dollar index. This has just been a basic blast through very key levels. Very good to see, because I think this is really good for a lot of the majors. I think this is what's causing the impact of it on a lot of the moves. We've been talking about it for a while, and it finally did it. We can see a very clear break now. We had the very clear break over here. This daily candle is sitting at the 92.88 level, very strong. It's opening itself right up to a 94 now. I think it can certainly get up there. It's respected the moving average. It's got the lightning bolt effect that we're always looking for, and the MACD does not look like it's showing any signs of relenting. So I think this is a really good opportunity to take advantage of the dollar strength, and of course that dollar strength is going to come, the biggest beneficiary of that's going to be the short on the euro. You can see that we've already got the lightning bolt effect there. We had the cross over there. Very good trade. I know a lot of people have got into this. I've got a lot of emails. A lot of people have shorted the euro, which is fantastic, off the key zones. I mean, look at that double top at the roll reversal zone. I mean, it doesn't get better than that, and a 20 moving average to bolster it up. This is effectively a direct reflection of what's happening in the dollar index strength. As you can see, What you've got to do now, of course, is just be aware that it's sitting at a level of support. You can see here, I'll draw a horizontal line to show you the support from this end here. You can see all this support through here when it was doing that channel effect way back in the middle of last year, and it was interacting quite heavily here, resistance here and support there. So I would expect that it's going to find some level of support around this zone, probably maybe a pullback to the 200 or the 20 moving average, or both. It could definitely be both if it takes a couple of days to get there, and then probably continue on with the shorting on that. I don't think it looks long at all from this point. The dollar index looks way too strong. So I think what you're looking for here is a bit of a pullback to the 20 moving average and the 200, and then look for shorting opportunities from there to join in on the short. I wouldn't be just shorting it at this level. This is a very important lesson. A lot of people just do this. They just jump in and short it because they think it's at a key level. You want the confirmation. Just be very aware that you've got a lot of support here and you've got resistance. So you've got to be very, very mindful of all that. Don't just jump into the short. But when you get the lightning bolt effects on the smaller time frame, or even more importantly, a pullback to these levels here, which is very, very healthy, then you can start looking for the shorts again and jumping in on this trend. But really, really good trading. All right, we'll go over to the pound USD. This one has played the game very, very nicely as well. It's come back down to a very, very important zone. Obviously, these important zones were always going to get tested because key zones were broken throughout the week, okay? So there's no surprises that we're here. These are exactly what we would have been aiming for if we were shorting anyway. So you should be absolutely in these shorts. This one you should be out of for sure. This is already starting to make its way back up to that resistance point that we can see here at around that 137.80. Okay, the moving averages are starting to catch up. If it takes its time and we get the perfect storm for us, really, which is a level of resistance followed by 50 and 20 moving average resistance as well, it really bodes well for a short from this zone. This is a very, very strong area though. Be mindful that below the 136.80 area is a bit of a minefield of support and resistance. So it's going to take a little bit of breaking, but it's certainly already done the first step, which is break that key zone above there at around the 137.80. And I think it's providing really good trading opportunities as well. You need to go down to a 1 hour time frame. What you're looking for here is longs into the area here at the 137.80. So I think the opportunities are pretty good to get that into that area, especially on the 1 hour. You can see it's already starting to track up. MACD is pretty strong, but you need to go to a 15 minute to probably take advantage of that. So any pullbacks to the 20 moving average, I think you can probably look at taking, and with a very, very clear target. It's only a scalp, it's only 20 or 30 pips, but when it gets up here, it's probably going to be looking like it wants to reverse. So keep an eye out for the reversal formations on the 15 minute and 1 hour charts to give you the clue that you can start shorting it again to the 136.80, but a really, really good trade. Okay, so the next one we're going to have a look at is the USD yen. This one has been going from strength to strength. For the last 2 weeks have been very, very flat, as you can see, but the dollar strength has certainly given this a bit of a boost up now, and it's doing its best to break this high here. So what we want to see, though, I'm not convinced that this has got a lot in it yet until it actually does it. We need price action to confirm exactly what we believe is going to happen, and that's going to come in the form of a daily close above the 109.50. If we get a daily close above that level, it's going to clear the way for all of this. All the moving averages are behind it, and it can certainly get that push up. You can see the stochastic is kicking in again in the middle of the zone, which is pretty good for a trend. Okay, we know obviously we're in a trend up, but we need to see that candle close. I'm not convinced this is going to do it until it actually does. I don't want to preempt what's going on here. The 1 hour is starting to look strong again, as you can see, but even then, the top of it's starting to weaken a little bit. So it's getting up there with a little bit of force, but then leveling out. It's having a lot of trouble breaking this zone. Okay, you can see that it's very, very clear. It's having a lot of issues getting past it. So rather than try to preempt it, wait for it to happen first. And if it does close above there, then it really opens itself up to a big move anyway. Like, you have to go out to a weekly to actually see. But if it does break this zone, the weekly's got 200 right in front of it too. So, I mean, that's another reason why it's struggling. But if it does break this level, it really opens itself up to 112. There's a big, big move up that can happen if we get a close above that level. Okay, so just be mindful of that. Watch for the break. And if you get it, then you can start getting involved. And if you want to jump in, once it's broken, all you have to do is go to the smaller time frames like the 1 hour or the 15 minute and trade pullbacks to the 20 moving average to get you into those trades. So really, really good opportunities. All right, so we will look at the S&P 500 now because it's just what we do. Everybody talks about it. We know that the divergence is there. We've got A-class divergence on the S&P 500 daily. Okay, it tried to push down. It's really struggling to get below this level. It gave it a crack last night, as you can see. It went all the way down to 38.50 and then pulled back a bit. Had a lot of strength towards the end of the session, and now it finds itself above the 20 moving average again. This one is really playing games with traders. I think it's doing its best to hold up there. It's not doing it very well. I mean, even though it is rejecting, it has had a fairly weak period over the last week or two. So it's not convincing me that it's going long, even though the buyers are absolutely resilient and reversing a lot of the sellers' moves. Like, this was a serious attempt to break down and it failed. But again, it's just one of those ones where it's very difficult to trade until we get a clear break of these moving averages. Like I say it every week, it seems to be at the moment. Until we get that daily break below these moving averages, we are not interested in shorting this, but we're certainly not interested in longing it either until we get a clear move up. Until this level is broken, we're not going to go long. Our preferred trade is to go short, so we get a reasonable pullback. Then we can start looking for longs at a good level. It's really important that we let price action dictate for us. We don't want to guess this. I don't think it's actually good trading because it's stuck in a zone where the buyers and sellers are very confused. There's a lot of anticipation of what's going to happen, and when it does, it's getting reversed. So until we get a very clear break of either the level below the 20, which is around that sort of 38, probably 40 level, it nearly did. It tried, but it gave it all back. So we want to see a daily break below that level, or we want to see a very clear and concise move up to try and break the top. But that's not my preferred trade. Again, the preferred trade is to the short because that's where the easier money will be in terms of trading. So I hope everyone's had a great week's trading. Look, we've had some really good moves, and I know a lot of people have caught advantage of it because I get the emails, which is fantastic. Keep sending them through. Thanks for joining us, and have a really good weekend, and let's see if we can get some really good moves into next week. We've got some key levels that need to get broken or even retrace from. So if you need to review the video, make sure you go over them and set your alerts, because I think we're in for some good times and some really good trading opportunities in the next week or two. Thanks, everyone.